Hey guys, it's that Dividend guy here, coming at you with another dividend investing video. Hopefully everybody had a great green day in the market. As you can tell, we are red, which is fine. That means that there are some deals in the portfolio, and that is something that I am always happy to see. That's the best part about investing, is that it's all about your perspective. So I'm not in this for appreciation. I'm in this for dividends. So when the stocks are up, that's good because I made money because they appreciated. But when they're down, I get a better yield. So I actually want stocks to go down. It's really weird. It's like the inverse of what most people want. But that's the strategy. So now that I know that it's red, I can look through my portfolio and see, well, maybe I can find a couple deals and try to, act on those. So let's jump in and look at the overall portfolio. Look at the individual stocks, and then some changes I made to the watch list. I do apologize, guys. I do kind of flip in and out of watch list stocks, but once they're in my portfolio, I really do try to keep them, unless they're like Simon Property Group or American Express, where I found better deals. So I'm always going to try to tweak and improve the portfolio. Where, like, let's say American Express is at $100 and it pays me 41 cents. Well, I could buy 3 shares of AT&T for that money and make $1.56. So why not get $1.56 instead of 41 cents? And I get an aristocrat versus a stock that doesn't have status in American Express. See what I mean? So I'm always going to try to find better deals because I'm trying to be a better investor, and that makes me more money when it compounds. So anyways, let's take a look at how the portfolio is doing. So today we're down about $400. For the week, we're up 742, still up 3.5%. For the month, we're up 2,000, almost 9.9%. For the 3 month mark, we're up $2,796, up 14%. For the year, we're up 2484 or 12.39%. And then all time since April 13th of 2018, so a little over 2 years here, we're up $2,075.83, up $10.15, or excuse me, up 10.15%. So that's pretty good. Considering I'm still pretty much a rookie at this, I just keep putting money in the market. I've done a lot of research. I've read a lot of books, but I'm no Warren Buffett. So I know I'm going to make mistakes. And there was a brief period there where I didn't have a job, so I couldn't actually invest. So the fact that I'm close to 24K, even with those months where I couldn't put any money in, that's phenomenal. I'm not behind by that much. So I was kind of surprised. I'm only behind by 4 months, and I was unemployed for 8. So that's pretty good. I'd stick to pretty. I mean, I did put a lot of extra cash in when I could, and that reflects. So that's good. Anyways, let's take a look at the individual stocks real quick. First, we have Realty Income, my monthly payer. It's down today. We have 15 shares. Average cost is 45.38, down 23.25, down about 2.4%. Total, we're up $238.80, up 35.8%. We do have a dividend of $3.50 coming in relatively soon this month. Then we have a Dividend King in Altria, 145 shares. Average cost is 43.89, so a good cost on average opportunity there, just a little bit. Down 52.20 today. Down 299 total, or 4.71%. Then we have Coca-Cola following up with another Dividend King here. 20 shares. We are at 51.26, so another good cost on average opportunity. Sorry, that's my buddy. He dividend invests too. He just got dividend drip on Robinhood, so that's awesome. Uh, so 20 shares, 51.26 is our average cost. We have a little bit of a cost down average opportunity here. Here, I'm going to actually do airplane mode because then I can't get another text while I'm recording. There we go. So we're down 11.40, 1.16%. Total, we're down $56.70, 5.53%. We're down on Coca-Cola, which means that we can cost down average a little bit. Then we have FRT, the only REIT that's a Dividend King. We only have 1 share right now, but I hope to boost that very soon. We're at an average cost of $113.40, which means that we have a decent, about $10 cost down average opportunity there. Down 332 or 3.39%. Total, we're down 18.76, not too bad. Down 16.5%. Then we have Disney, one of my personal favorites. We have 2 shares, down 578, Today, down 2.33%. Total we're up $30.94, up 14.66%. I'm not sure if they've actually reinstated the dividend yet, since they're starting to open up the parks. If somebody knows, let me know. I haven't done a lot of research on Disney as of late. It's just one of those it's my guilty pleasure stock in the portfolio, where it only pays, when it only paid semi-annually, so it only pays twice a year. It pays 88 cents. The goal is to get like 120 shares or something crazy like that, I think it's 48 shares in order to pay for my Disney Plus subscription throughout the year. So let's take a look. Oh, because Disney Plus is it's $8, and with 10 shares I would get $8.80. So that would pay for 1 month. So I'd need 100 shares, a little bit more than, like, it'd be, yeah. So I did the math. It'd be like 50 shares, like, to pay for my Disney Plus subscription. So that's the end all be all go with Disney. Once they reinstate their dividend, is to get enough shares to buy my Disney Plus subscription. That way I never have to pay for it. Disney pays for itself, technically. But we have 2 shares. 105.53 is our average cost. We're down $5 today and some change, up $30.94, up 14%. So that will be boosted up. This is my guilty pleasure stock. I love Disney. I'm a Disney, purebred. Love it. I think they own a lot of great assets, and it's one of my favorite companies. And I own Disney Plus, and I watch it all the time. Then we have Lowe's, a dividend king. We have 2 shares. Average cost is $100.86, down $162 today, up $55.80, or up almost 28% on Lowe's. Next, we have AT&T, a dividend aristocrat, one of my favorite stocks. One of the first stocks I bought too, actually. 65 shares, $31 is our average cost. So we're above a little bit, about $1, almost $2 above our average cost here. Down 41.60. Total, we're up 63.50, up 3%. Then we have AbbVie, a dividend aristocrat, or a king, depending on who you ask. They spun off of Abbott Labs, who have increased their dividend for like 56 years. So if you count AbbVie as a part of Abbott Labs, then they have a dividend king status. If not, then they've only paid for like 26, I think. So depending on who you ask, the status changes, but I count them as a dividend king. So I have 60 shares. 72.22 is our average cost, which we're really up on the stock. I bought it during the Allergen, I don't know how most people pronounce it, acquisition. So I got a really good price. We're up $37.80 today. Total, we're up $14.74, up 34% on AbbVie. Then we're into the 36912 stocks with 3M. We have 2 shares. Average cost is $147.28, so we're up pretty nicely on 3M, which is also, like, it's a gift and a curse. Like I said, I don't really want the stocks to go up, because then I can't buy them. Like, I don't want to buy it above my average cost. And a lot of these companies, the ones that have the status that I look for in aristocrats and kings, don't falter a lot. A lot of them are like straight up. So it's really rare to catch them at those dipped levels. And sometimes you don't know when they're going to do it. So if you don't have the cash, set aside specifically for that stock, a lot of times those opportunities pass you by. But anyways, I'm down $7.50, down 2.25%. Total, we're up $31.35, up 10.64%. And I do have a dividend coming in, I think, Monday. Then we have J&J. We have 2 shares of J&J, up as well, about $13 on J&J. We have $135.79 as our average cost. We're up $4.62, up almost 1.6%. Total, we're up $25, 9.19%. Then we have Target. We have 10 shares, $87.68 is our average cost. This is just like AbbVie, it just keeps climbing. We're down $7.20 today. We're up $323 on 10 shares. That's really good. We're up 36.86%. Then we have Dominion Energy, my utility play. We have 2 shares. Our average cost is $80.52. We're up $2.30 today, up $12.97 total, up 8%. I don't want to buy it because it's up $7. I might give in eventually and just start buying some of these stocks because they're quality, and a lot of times you have to buy up. You have to pay a premium for a lot of these stocks because they're the best of their breed. They're the best in their sector. So it makes sense that you'd have to buy up, but I don't like to do that because then my dividend yields are lower. But next we have Exxon Mobil. 56 shares, 57.92 is our average cost. So we still have a great cost on average opportunity on Exxon Mobil here. Down 192 today, down 438 total, which is not that bad. I've been down like $1,400 on the stock, so that's actually really good. Then we have Wells Fargo at 28.90, 42 shares at 25.54 is our average cost. So we're up on Wells Fargo, and this is the one that I bought last month. So I've already seen pretty good gains from holding it for just a month. So we're down 156.66, down 11.43%. Total, we're up $141.24, up 13.17%, which again, I bought this about a month ago. So it's kind of cool to be that far up. But again, I wish it was still closer to my average cost. I would probably buy Wells Fargo up to like the $32 range, so not much more climbing here before I would cut myself off. Then I believe that's the end of the portfolio. So overall, we're doing pretty good. We've seen a lot of growth, a lot of like bounce back from stocks that I wouldn't have really thought yet. Banks have been hit really hard, so it's kind of unique to see Wells Fargo kind of popping back up. Exxon Mobil I was down on for a long time, and now I'm starting to get closer to break even. So that's awesome. I do love that I can cost on average on some of my favorite positions though. But let's take a look at the watch list. I made a couple decent changes. The goal that I'm trying to get is I'm trying to be more even in the amount of stocks that pay me each month. I am a little bit biased towards 3, 6, 9, 12 because I do own a decent amount of Kings for that set, and it has like McDonald's, which is going to be one of my core positions. But you'll see what I mean. I'm trying to make it so I get paid by, if I own 25 stocks, then I want to be paid by like 7 each month. But I'm biased towards 3, 6, 9, 12. So to start it off, Leggett & Platt, they're very close to Dividend King status. They're, I think, 2 or 3 years away. So I would like to add them to the portfolio, especially at this price. They're at 35, and their 52-week high is 55. So I have like a $20, $19 upside in the stock. So definitely would want to buy Leggett & Platt. I did buy Altria this month. I could have bought Leggett & Platt. Originally, I was going to. The issue with that, though, is Altria has the status. Altria actually pays double their dividend. They pay 84 cents. I believe Leggett & Platt pays 41. So Altria pays double the dividend that Leggett & Platt does. And from the data that I saw, Altria actually boosted it more last year than Leggett & Platt did. So I'm not opposed to owning Leggett & Platt. I just think that my money grows a little faster in Altria. And once I get Altria to a position where I feel like it's a little bit too big in the portfolio, then I'll start putting money into stuff like Coca-Cola, Leggett & Platt, and the other stocks that pay this month. Which next, we have PepsiCo, which I do want to have a decent position in. I want Coca-Cola to be one of those staple stocks in the portfolio, one of those pillars, one of those foundational stocks. And I think Pepsi is actually a better investment than Coca-Cola. I'm just a Coca-Cola fanboy, so I bought Coca-Cola first. So at 134, I don't see enough upside in Pepsi. That's the other problem with a lot of like I said, with these really good stocks, is that a lot of times they're not at buying levels because they're so popular. A lot of people buy them. So I wouldn't buy Pepsi here. It only has about, it's at 34, so $13 of upside. I look for 15 to 20, so that's not quite enough upside. If it dropped down to like 130 or 129, I would buy it. Next, we have Kimberly Clark, another dividend king, at 138. Again, at 149, that's $10, $11 of upside. Not enough for me. I need 4 more. So I couldn't buy Kimberly Clark at these prices. Guys, I try to be really disciplined about where I buy my stocks, because that way I have a little bit more safety and cushion. And when it drops, if it drops lower, then I can get in at a better price and a better dividend yield. But I don't want to buy it like $10 below, with like too close to the 52-week high. I mean, it gives me a chance to cost down average, but like we saw with something like Target, like I got in at the right time, and a lot of times it's very difficult to time the market, and you can miss those opportunities, or even worse, you can think it's the right opportunity, buy it, and then it drops even lower, and then you don't have the cash to take advantage. So that's what I'm trying to do, is build in like a $15 to $20 kind of wedge so I can buy it, and then if it goes down, I won't use all my cash. So Kimberly Clark, not cheap enough for me to buy yet. Verizon, so now we're on to the 811 stocks. In Verizon, I wanted to put Clorox in here, but I chose Verizon instead because I did the math. Verizon pays 61 cents per share, and Clorox pays $1.01. So I can buy almost three share. Well, uh, Clorox is $200 a share, so I can buy at least three, almost four shares of Verizon. So I can make $1.80 versus $1.01. $1.80 is going to compound a lot faster and it's cheaper, so I can buy more in bulk with Verizon. So I do have AT&T, but this is more of a pure telecom play where I like AT&T for the Warner assets as well. But at 57.67, I don't see enough upside in the stock. I might buy it because I can afford to buy a decent amount of shares at $57, more than I could of Clorox at 202. So I might be willing to bite the bullet a little bit here with Verizon and boost my income a little bit more. But as of right now, I would want to see it closer to like $50 a share, so about $7 off. Next, we have Colgate, a dividend king at 74. At 77, I don't see enough upside, but I am trying to get a lot more kings into the portfolio, and I can afford 70. The thing is like if a stock is like $150 to $200 a share, I put 1,000 in the market. So I can only buy 5 shares of stock like that. Like say with Clorox, I can only buy about 4 shares of it, maybe close to 5 if I add a little bit more cash. So would I rather buy, say Colgate pays 40, like say it pays 40 cents to make it even, right? I can buy 10 shares and make $4 versus the four or the 3 shares of Clorox, or the 4 shares and make 404. I can buy like more than 10 shares. I can buy like 13 or 15 shares of Colgate and be fine. So that's where I kind of that's the difference, is like I look at the price that way too when I'm considering kings, and I'd rather buy a king that's cheaper, that pays around the same dividend, or that would give me more for the same amount of money in dividends, because then that compounds faster. So I'd probably be buying Colgate here. I would give it the exception because I use a lot of Colgate products, and $70 I can buy a decent amount with my money that I put in the market every month. Procter and Gamble is one of those that it's one of the rare exceptions. It's about a $10 upside. I would want it to be closer to like 100 or like 110 or even like 105 before I bought it, but I really want Procter and Gamble. So I'll probably be buying it. If it's not, because this month was Altria, so next month would be Procter and Gamble, but I'm probably going to be leaning more towards Verizon or Colgate. Probably Colgate. So I'll probably buy them the next set of months. General Dynamics. This one's a new one that I added today. So they pay, I think it's like $1.01, I think, per share. But I do want to get into defense, and I was looking into a lot of the different companies. They are an aristocrat, and they pay when I want them to pay. So, as I said before, I only had like 3 stocks that were paying me in Lowe's, AbbVie, and AT&T, right? That paid me for the second set of months. So that's why I added Verizon, and I added General Dynamics, because that makes it more rounded. I get paid by more companies. I'm more diversified, and it adds to my dividend aristocrat percentage as well. So General Dynamics at 150. It's at 52-week highs at 190. So I have about 20 bucks of upside. And I look for 15, so I'd definitely be buying General Dynamics there. SX Property Trust, anything below 300 I would buy, so definitely buying that. American States Water, dividend king. Everybody drinks water. I love this company. I gotta put it in priority, because I could buy a good 10 shares there too. And at 80, I have $16 upside. Definitely buying that. Waste Management at 108, 126 is its high. So yeah, I have about just enough for me to buy it. So yeah, I'd be buying Waste Management. Then Mickey D's, my real estate play. They sell burgers and fries on real estate. At 200, I have $21 of upside. So yes, I would definitely be buying it with like $26 or $27 of upside. And that's the end. I did get rid of Public Storage because I felt like that was the weakest out of the companies that I owned. that I had on my watch list for that set of months. Like, I think waste management, I think trash is going to do better than public storage. I think water will do better than public storage. So the thing is, I have a decent amount of companies paying me for 36912 already with Exxon, Wells Fargo, AT&T. Like, I have like 6 already, so I needed to trim the fat on 36912 and add a couple more in General Dynamics and Verizon to make it more even. So that's what I mean, is I'm trying to balance it out so I'm not getting paid so heavy on one set of months. And then, of course, we have O that pays me every single month, which could balance it out a bit. So, anyways, guys, those are the changes that I made to the watch list. I can't make any promises. I might put, like, I had Visa on there earlier today. I had public storage on there up until, like, 10 o'clock tonight. So, like, I might put one back. And I might go farther than 25 stocks. I wouldn't mind owning, like, 30 to 40. But that's a lot. And at that point, you might as well just have an ETF. But the issue I have with the ETF theory, or like that type of investing, is that you miss out on a lot of the individual dividend payments. So like VU has 500 companies in it, right? The S&P 500 index. You don't get paid dividends by 500 companies. You get paid like $1.02 or like $2 for it. But you own 500 companies. That's my problem, is like I would rather own the 500 individual companies that make up the S&P and make those dividends. That's why it's different. I totally understand why you would buy an ETF. It makes sense to me. It just, the amount of passive income that I would miss out on not owning individual stocks would bug me. But anyways, guys, thank you so much for watching. Sorry about the rants, but I think it's really important that I give you guys insight in that type of, kind of my philosophy on investing and stuff like that in these videos as well. So you kind of get my point of view and where I'm coming from investing wise. Also, I do have an update. I did get paid some dividends tonight, but I didn't want to show you guys that yet. I know the cash balance is pretty heavy. It was at 30 and now it's at 87. So we did get paid some dividends, but I'll show you guys that tomorrow. That's going to be my extra video. If you guys noticed, I've been trying to post during the day a little bit before just the portfolio updates. I'm trying to do more diverse content, so I'm going to be putting out like top 3 videos for Motley Fool, top 5 stocks to buy and hold forever, like lists, maybe get into like other investors' portfolios, maybe even have other investors on the channel, like Skyping or something like that. If that's something that you guys would like to see, let me know. Also, I could talk to like my friends like Dana that invest, or Mitchell that invest. Let me know. I'm just trying to put more content out there and be, again, just like the portfolio, be a little bit more diverse in my content, not just do portfolio updates. But anyways, guys, thank you so much for watching. Remember to hit the subscribe button, and when you do, hit the bell notification for that Dividend Guy on my YouTube channel so you don't miss any updates. I do post a portfolio update Monday through Friday. I try to keep that as consistent as possible. But as I said, I'm trying to sprinkle a little bit more content in there for you guys. So I get a wider audience. The more videos, the more views, that type of thing. The channel will grow more the more I post. So trying to stay dedicated to my regular schedule and then add some more stuff in there. But anyways, guys, I'll see you tomorrow with another dividend investing video. Take care.